Hello everyone. Why I think there is a high probability US might scrap the additional 25% tariff on Indian goods due to the Russian oil purchase. Second, update related to India EU free trade agreement. Then for the third session in a row, US market hit the fresh all-time record high and much more. All this we are going to discuss in our regular pre-market report video for today, 29th October 2025 for the Indian stock market in terms of Nifty and Bank Nifty. First, about why I think US might scrap the additional 25% tariff on Indian goods in the next 2 or 3 weeks. After the US and Europe sanctions on two largest Russian oil firms, at present both India and China almost reduced all their oil purchase from Russia, which in the last 1 week we have discussed it multiple times. That's the reason number one. Number two, yesterday I read this article on money control. As of October 27th, which is last Monday, India's crude imports from US, please note from US, reached 5,40,000 barrels per day, which is the highest since 2022, and it is almost 10% of the India's total oil demand, which is like near 50% higher compared to what India was buying from US before a month ago. And for November and December, this trend likely to continue in the same manner. So at present, India not just stopped buying Russian oil, but also they doubled the quantity of oil purchased from US, which in a way it's a positive leverage on US. Then number three, I always thought about this from geopolitical perspective. There is no way US will sign the deal with India first, then the deal with China. Since then, China, who got more leverage against US, will demand the same deal as India. Hence, I'm guessing US is punishing India with additional tariff as a temporary eyewash to China. Now, as most of the viewers know, Trump and Chinese President Xi is going to meet tomorrow and they potentially might agree on some sort of deal between US and China. Hence, if that's the case, then US could sign the deal with India as well. So, because of those three reasons, in 2 or 3 weeks, I think at least US will scrap the 25% additional tariff on Indian goods. Let's hope for it. Then moving to the second topic, updates related to India EU free trade agreement. Yesterday our Commerce Minister Piyush Goyal, after the meeting with the European Union counterpart, gave an interview. In that he said that India and EU free trade agreement talks are in the closer stage where both the parties have ironed out most of the major differences. Just for info, at present, EU tariffs on Indian goods average around 9 to 10%. If the FTA happens, these tariffs could fall to zero, which means it's a margin boost and volume expansion for all the EU exporting Indian companies. So, if this deal materializes, then it's a major reform signal, and even today, from the stock market perspective, also it's positive. Third topic, yesterday in the aftermarket hours, Indian government released the India's industrial production output IIP data for the September month. So year over year, India's industrial output increased 4% against 3% market expectation. And if you see segment wise, consumer durables was the major gainer, increased 10.2%. Manufacturing output was decent, up 4.8%. However, on the negative side, mining activity decreased 0.4% and consumer non-durables like food items fell 2.9% year on year. So overall, IIP data is positive, better than expected. Manufacturing and consumer durables are doing well, but not all the sectors. Then fourth info, yesterday SEBI proposed the new fee structure for mutual funds. At present, Indian mutual fund showing their expense ratio to the customer everything in as one number, which includes all cost, commission, brokerages and taxes all together, and there is no breakup. But now SEBI proposed that all mutual funds should disclose this breakup upfront, which is really good from customer point of view, but mutual funds are protesting against it as they don't want to do. In addition, SEBI also proposed to lower the cap on mutual fund brokerage fees, for example, in the cash market to 2 basis points from 12 basis points, and for the derivatives, it's to 1 basis point from 5 basis points. Here, this is positive for investors as this will reduce the overall fees. However, for AMCs and brokers, this could impact their revenue. So, mutual fund and broking stocks might see some pressure if this is implemented. Either way, this is just a consultation paper. We need to wait for the final implementation. Then moving to stock specific, yesterday Jindal Steel, Adani Green Energy, Adani Total Gas are the some major companies released their Q2 results in the aftermarket hours. Here, Adani Green Energy posted strong numbers with 25% profit increase, which was driven by higher power sales and improved capacity utilization, and it beats the analyst estimation. So, this is positive. Whereas on the other hand, Jindal Steel reported revenue growth but a sharp drop in profit, mainly due to margin pressure. And similarly, Adani Total Gas had higher revenue but the profit declined 12% as higher gas imports cost influenced the profit margin. So these two stocks, I would say, more of neutral to negative. Either way, all these stocks will be on focus today. Now coming to US market, as per Wall Street Journal, they said US would be willing to reduce some of the existing tariffs on China if China agrees for what US want means. We know tomorrow US President Trump and Chinese President Xi is going to meet in South Korea. This is positive news showing further progress in US China trade negotiations. In addition, yesterday Fed started their 2-day FOMC meeting, which they will announce their decision tonight. And at present, analysts were expecting at least 25 basis point rate cut. So the federal fund rates will be down to 3.75% to 4% range. Then third, last night Wells Fargo increased this year end S&P 500 target to 7,100 and they cited AI optimism as the reason. Because of all those reasons, US market for the third session in a row, all three major indices hits the fresh all-time record high value. In the end, Dow Jones increased 0.34%, S&P 500 was up by 0.23%, and Nasdaq outperformed and increased 0.8%. Despite that, for some reason, VIX increased 4% and moved closer to 16.5 from below 16 on Monday night. Then about oil, in the last 1 week, oil price had been increasing on the expectations that India and China will stop buying Russian oil due to the sanctions. And in a way, day by day, it's becoming true, which we discussed earlier. But the problem now is, last night there was a report that OPEC plus countries want to increase their oil production output to capture their last market share, which in turn pushed the oil price down by 2%. So at the time of this video, WTI crude trading at 60 US dollars per barrel and Brent crude trading near 64 US dollars per barrel. Then regarding Indian ADRs, I don't know why nowadays it's trading completely out of sync with the broader market. For the second day in a row, it was very much mixed. As it is, Wipro and HDFC Bank ADR closed positive, whereas Infosys and ICICI Bank ADR closed significantly negative. If we calculate the arbitrage, only HDFC Bank ADR alone showing the positive difference, whereas all others were indicating negative 0.5 to 1% difference. Then Gift Nifty wise, early morning today, November month expiry traded at 26,125. So equating that with the spot market, for now it's indicating the gap up opening of 30 to 50 points. As a summary, India's crude oil imports from US is increasing and is positive for US-India relations and it could reduce some US-India trade tensions. Then India-EU FTA update is positive, but almost 1 year both the parties are saying the same. IIP data came better than expected and last night again US market hit the fresh all-time record high value. So overall both domestic and globally the sentiment is positive, Gift Nifty indicating the gap up opening. But as we discussed, Indian ADRs were mixed. Just for info, at present US future market is trading mild to positive. Moving on about institution, in the cash market yesterday FI turned as mega net buyers. They net bought for massive 10,350 crore rupees, whereas DIA also net bought for 1,100 crore rupees. I tried to find the reason like why and what they net bought this much kind of, but so far no reason was released on any of the websites. If anybody knows, please let me know in the comment section. Then coming to derivative market participant price open interest analysis, because of the monthly expiry yesterday, 21% of the index future open interest, 53% of the call option open interest and 57% of the put option open interest was unwound or expired. Hence, the index options PCR ratio came down from 1.08 to 0.99. Then, based on remaining open interest, stance-wise combining both index future and index options, client positions favoring bullish, whereas both property traders and FIIs favoring bearish stance. There's no point in seeing the percentage as the open interest for the new series haven't yet developed. If required, please pause and have a look. Then, as per stock open interest, Supreme Industries, Mazagon Dock Shipbuilders, VBL, Torrent Power, Polycab, Vodafone Idea, Adani Green, and Ultratech Cement were the 8 stocks that got an increased open interest along with a negative close, indicating the short build-up. On the other hand, MFSL, Suzlon, IEX, JSW Energy, PNB Housing, Indian Bank, Union Bank, and BHEL were the 8 stocks that got an increased open interest with a positive price close, which means these stocks got the long build-up. About the things to look out, earnings-wise, L&T, Coal India, HPCL, United Breweries, LIC Housing Finance, and Transport Corporation of India are some of the major companies scheduled to release their results. Then, macro-wise, during our market hours, there is nothing that I'm aware of that is scheduled to release and could influence our market. But in the night, US Fed interest rate decision is due. And in addition, Fed Chairman's press conference and new home sales data are some of the important items we need to keep an eye out today. Coming technical, Nifty opened 30 points gap down but immediately climbed above 26,000. Then it could not sustain those early gains and was under pressure for most of the session. Then finally closed below 26,000 level. Thus, on the daily chart, Nifty formed a doji candlestick pattern indicating indecisiveness among buyers and sellers after a bullish candle formation in the previous session. In addition, all key moving averages continued to trend higher with 5-day exponential moving average acting as the support. Furthermore, RSI sustained above the 70 zone despite a normal pullback, while MACD also maintained its upward trend. All this indicating that the overall bullish structure remains intact despite ongoing consolidation phase. Hence, in the short term, Nifty might witness a decent rally if momentum picks up above 26,000. On the higher end, resistance is at 26,300, while support is at 25,850. In case of Bank Nifty, it opened 100 points gap down and remained range bound throughout the session, then closed above 58,200. Thus, on the daily chart, Bank Nifty formed a bullish candle with a lower shadow, indicating a positive trend with buying interest at lower level. In addition, it remained above all key moving averages with RSI at 73 stayed strong, while MACD continued its upward journey, indicating that the bullish momentum remains intact. Hence, 58,200 to 58,300 zone will act as the immediate resistance, and if Bank Nifty manages to give a follow-through move above 58,300, then pullback can continue further towards 58,800 level. On the downside, 57,600 to 57,500 level will act as the crucial support. Regarding the options front, the maximum call option open interest was at 26,000 strike, followed by 26,500 and 26,200, with maximum new call option rating at 26,000, 26,200 and 26,500 strike. On the other hand, the maximum put option open interest was at 25,500 strike, followed by 26,000 and 25,400, with maximum new put option rating at 25,400, 25,500 and 26,000 strike. Thus, from options data, it indicates that 26,000 level is expected to be the crucial for Nifty's further upward journey with immediate support at 25,800. So that's all in this video. Hope you got some information. Please consider subscribing the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this as I'm not a SEBI registered advisor. I'm doing this for me and viewers educational purpose only. Thanks for watching.